Ever wondered what separates the top 1% of investors from everyone else? Is it a secret algorithm, insider information, or just pure luck? The truth is, it's none of those. It's a mindset, a complete behavioral, strategic, and psychological blueprint that anyone can learn. Today, we're going to break down that exact blueprint, piece by piece. By the end of this video, you'll have the 11 core principles that guide the world's most successful investors. So, grab a notebook and let's dive in. First, and most importantly, elite investors understand a fundamental truth. The market is a device for transferring wealth from the emotional to the disciplined. When others panic and sell during a downturn, the disciplined see opportunity. When the crowd gets greedy during a bubble, the disciplined exercise caution. They don't react to the noise. They respond to their plan. Emotional decisions driven by fear and greed are the single biggest destroyer of wealth. The masters of the game have mastered themselves first. This leads us to principle number 2, distinguishing activity from productivity. Many amateur investors feel the need to always be doing something, buying and selling, constantly checking their portfolio. This is just busy work. Elite investors know that most of the time, the best move is no move at all. Their success comes from a few well-thought-out high-conviction decisions, not from frantic, constant trading. They focus on productive actions, like research and analysis, rather than pointless activity. Remember, your portfolio is not a video game. It's a long-term wealth-building machine. Next up, how do they view risk? For most people, risk is a scary, vague feeling. For elite investors, risk is a mathematical variable. They don't avoid risk. They manage it. They ask questions like, what is the probability of this investment failing? If it does fail, what is the maximum I can lose? And what is my potential upside if it succeeds? They quantify risk, which turns a terrifying unknown into a calculated decision. They know exactly how much they're willing to wager for a potential reward, making every investment a calculated bet, not a blind gamble. And that brings us to asymmetric opportunities. This sounds complex, but the idea is simple. Elite investors hunt for investments where the potential upside is many, many times larger than the potential downside. Imagine a situation where you could risk $1 for a chance to make 50. That's an asymmetric bet, while others are happy with 50-50 odds. The best investors are looking for these lopsided opportunities where the reward for being right vastly outweighs the penalty for being wrong. This is how you build truly transformative wealth without taking reckless chances. Principle number 5 is about focus. Elite investors focus on market cycles, not the daily news. The news cycle is designed to grab your attention with sensational headlines, creating constant noise and emotional whiplash. But market cycles, the long-term ebbs and flows of the economy, are where the real trends lie. They understand that economies expand and contract, that industries rise and fall over years, not days. By zooming out and looking at the big picture, they can position themselves for long-term trends, completely ignoring the short-term drama that derails most people. What about how they view their investments? They think like business owners, not stock traders. When they buy a stock, they aren't just buying a ticker symbol that goes up and down. They are buying a piece of a real business. They study its leadership, its competitive advantages, its balance sheet, and its long-term prospects. They ask, would I want to own this entire company? This ownership mentality forces a long-term perspective and a much deeper level of due diligence, connecting them to the underlying value of what they own. Of course, you can't put all your eggs in one basket. That's where strategic diversification comes in. But for the elite, diversification isn't just about owning 100 different stocks. It's about owning different types of assets that behave differently under various market conditions. This could mean a mix of stocks, bonds, real estate, and maybe even commodities. The goal is to build a portfolio that is resilient, one where a downturn in one area doesn't sink the entire ship. It's about building an all-weather financial fortress. How do they do this consistently? With repeatable systems. Success in investing isn't about one-off brilliant moves. It's about having a reliable process you can execute over and over again. This could be a checklist for evaluating a new investment, rules for when to buy or sell, or a system for portfolio allocation. A system removes emotion and guesswork from the equation. It provides a framework for making rational decisions, especially when the market is chaotic and your instincts are screaming at you to do the wrong thing. This leads directly to our 10th principle, focusing on the process, not the outcome. In the short term, you can make a great decision and still lose money. You can also make a terrible decision and get lucky. The elite investor knows this. They don't judge their performance based on a single outcome. Instead, they ask, did I follow my process? Did I stick to my system? They know that if they consistently run a good process, the positive outcomes will take care of themselves over the long run. It's about discipline and trusting the system you've built. Finally, the most powerful tool in any investor's arsenal: time. Elite investors don't try to get rich quick. They invest with time. They understand the power of compound growth, the snowball effect, where your returns start generating their own returns. The longer you stay invested, the more powerful this effect becomes. They see time not as an enemy to be beaten, but as an ally to be embraced. Their greatest fortunes aren't made overnight. They are built patiently, brick by brick, over decades. So, there you have it. The 11 principles that form the blueprint of an elite investor. It's not about being a genius. It's about being disciplined, patient, and systematic. Master your emotions. Focus on process. Think like a business owner. And let time do the heavy lifting. Start integrating these principles into your own approach, and you'll be well on your way to changing your financial future. Thanks so much for watching. If you found this breakdown valuable, hit that like button and subscribe for more deep dives into building wealth. Let me know in the comments which of these principles resonated with you the most. See you in the next video.